Ed, good afternoon to you.
And to you, Michael.
Okay, so the unemployment rate is 4.3%. It's a statistic on paper, but it's people behind the number. What are we learning from this?
Well, now that we know that it's gone up to 4.5% in the September quarter, it means that since the Albanese government came to office, a staggering 130,000 additional unemployed in Australia. We constantly hear from the Treasurer that the economy is in good nick, but Australians know that's not the case. They're feeling it with the cost of living crisis. We know that Australia's living standards have dropped more than any other developed nation, and unemployment is now up above the RBA forecast. And you're right, Michelle Bullock, so the Governor of the Reserve Bank, was in Washington, D.C., and she was saying only yesterday that Australia needs to be careful because the budget is so weak. And right now you have both inflation and unemployment running higher than the RBA's forecast. That's highly unusual, Michael, highly unusual. And you add to that a very slow, sluggish economy. That spells bad news, and it puts the RBA in a very difficult position.
Interestingly, just leaving the unemployment thing aside for a moment, in Washington, I think yesterday, Michelle Bullock said, and I quote, "If you look at the forecast for the current government forecast for their deficits out to the foreseeable future, quite substantial ones," she said, "because spending is growing very quickly and revenues not as strongly," she said, "if we can't make the budget stronger during this period, while the economy is doing quite well and there's lots of people employed, then what happens in the next downturn?" Well, that's a good question, isn't it? What happens in the next downturn if the mineral cycle tapers off a bit, but the spending keeps going up and up and up?
Michael, spot on. And this is the bigger picture, right? I mean, people are doing it tough now. Well, God help us if we have yet another external shock. So if you go back in time, remember the GFC? And so what was that? I don't know, 13, 14 years ago now. When the GFC hit, Australia actually had its books in balance. We were in good shape, which meant we were able to weather a major downturn. Same as the pandemic. So when COVID hit, the coalition, just like in the GFC, the coalition had gotten the books back to balance. That allowed more wriggle room so that we could run our economy better and save jobs, save businesses. So there will be another external shock. You don't know when it's going to happen, but we need to ensure we have more buffer, more room to move. But the problem is the Albanese government has come after probably the greatest windfall in revenue in history, and that is because of our resource sector. Like never before so much money. But instead of banking the whole thing and giving us the buffer, they keep spending. So government spending is growing 4 times faster than the economy, which means right now the RBA has very little wriggle room when it comes to moving the cash rate. But if an external shock hits us, then we are not going to be in the strong position that we have been in the last 2 examples of that GFC and COVID.
Okay, I've only got a minute or so before I've got to take the news. People will be asking, okay, well, the unemployment rate ticking up now, not enough jobs, not enough jobs to support the population demanding work, and yet we're still bringing in lots and lots of people from overseas to add to the population. You know, granted, some on skilled visas, but there's a lot of people on skilled visas that aren't applying those skills in the market. They're doing something far below their skill level, etc. Is immigration still too high considering these numbers?
Well, you know, what we need is far more targeted immigration where we've got the right skills coming in. The government has been overly reliant on population growth. They put the economy in the slow lane. The only thing that really has been pushing it along has been an enormous import of people. That also exposes the weakness of the underlying economy, Michael.
And then finally, just on the strength of the economy or lack thereof, it's interesting. I saw the Commonwealth Bank, the CommBank Household Spending Insights Index released this morning. And they said that Australian households continue to loosen the purse strings in September, up 0.6%, in fact, continuing the consistently strong pace of spending growth seen since March. The CommBank said lower interest rates, moderating inflation, tax cuts last year have created a more favourable environment for consumers. Even when we strip out the impact of high utility bills, spending remains solid across key categories. Now, why would spending be going up? Why would people be feeling confident if indeed the unemployment rate is going up and the economy isn't so strong as you say?
Well, one of the issues we have is while some of that data is saying just that, we have other data coming out which is saying, in fact, consumer confidence levels are low and they're dropping. They continue to drop. There's no doubt where there have been certainly those utility increases because the rebates have come off energy and so forth. Households are spending more. But it is surprising because all the other data, and including this week, there was a report out saying consumer confidence levels are taking a dive. But we'll wait and see. I mean, for a little while, people thought interest rates were going to be coming down considerably. They got excited. Maybe they loosened their purse then. But as we've seen, the RBA is in a very difficult position. We just don't know.
We don't, no. I guess higher unemployment numbers, if it persists, might mean lower interest rates, but we'll see again.
Exactly.
Other factors in play.
Higher inflation means lower. So, so what do you do? Lower, higher, who knows?
Yeah. Throw them up in the air and see what you catch. Thanks, Ted. I appreciate you calling in.
Thanks very much, Michael. Bye.
Ted O'Brien, the Shadow Treasurer.